here's the $64,000 question. I'm going to put you on the spot here. Do you think that this pullback here was the end of something, or maybe just kind of a break or a reset in the bull market that we're currently in?
Yeah, it's funny because there's so many things that have floated. We talk about X. I don't use any other social media site. I don't really pay attention to mainstream media, and no disrespect to the cable shows and whatnot. I purely source all my information from individuals that source it from where Wall Street gets it. And for me, that really cuts down the noise.
Absolutely.
We know that from a statistical standpoint, the Qs dipped their toes in correction territory. They flushed out, closed on the lows, and they've only gotten up since. So, this has kind of been that residual effect of, buyer demand at the most, I guess, extreme point that they could have gotten into. Now, part of it obviously is going to be really attributed to the news. Part of it is attributed to the Fed policy. Ultimately, this really just comes down to the fact that we are extremely bullish state. The SPY made new all-time highs and closed at those levels yesterday. The Dow and IWM has been continuously holding up better. It's really only been the NASDAQ and the AI stocks that generally has been in trouble. But even now, the NASDAQ, yesterday at the open, a lot of the AI stocks tanked, which generally would have tanked the Qs, but the Qs actually held up well, refused to go negative. They fought at that closing price. And this was really largely attributed to the Mag 7 names that are now starting to do the heavy lifting. Amazon was breaking out, Google was rallying, Microsoft, I think, jumped $10 in the first 10 minutes of the day, if not more. And Meta as well has been screaming off the lows. And so it's almost as if they were the ones that got the bus rolling down the hill. And now, all the AI stocks are just piling in and adding weight and really just kind of carrying that momentum further. So for me, it's really good to see kind of the sympathetic and more of the correlative idea. We've seen segmented rallies, right? If it's not AI, then it's software. If it's software, cloud, cybersecurity, essentially. Even the hyperscalers were kind of on the other side of the AI play, because ultimately, if AI is going up, it means that the hyperscalers were spending more and they were retracting, and it's almost we were sacrificing them to the bullish gods to get the AI stocks up. And now we're seeing a little bit of a merriment of getting everything collectively rallying. And this is when we're going to be in our most bullish state, which, by the way, we are absolutely at some point really primed to see just an extremely broad explosion. People don't realize that with this buildup, with this retracement, with this pent-up demand, that if somehow the NASDAQ could break out and sustain, and there's really no catalyst to bring it down, we certainly have way more upside than people could suspect. It's surprising to hear that, traditionally from, let's say, the last 20 years, when the S&P and the NASDAQ gained 5 to 7% on the calendar year, that was pretty good. We're going to perhaps see that in the Qs effectively in a month, if not less, where we're going to knock on the door of tacking on 7 to 10% at the highs. And that's just the pent up, demand for the AI plays. It's really traditionally more now that retail traders are starting to take more control of the markets than previously before. And then you throw in the idea of the new PDT rules, where people are just going to kind of just jam it in, and they're effectively kind of causing these little gamma squeezes all over the place. And this is just a huge recipe for an explosive move. And, I'm not saying it's going to happen anytime soon, but it's really possible at some point this year, if all the stars line up, that we could just see that really just nasty explosion come into the picture.